Good morning. Good morning. Happy Sunday. Good morning, press. Good to see you, sir. Good morning, Stephen. Thank you. Here in COK. Let's see. Oh, make sure everyone's. We're going to give it a minute or two. Let everyone in. Good to see everyone. Hope you had a nice weekend. It's cold here in Utah. All right, let's see who's got the coldest 9 a.m. temperature. Um, I'm at 15 degrees. Where's everyone at? 49 in Rhode Island. That is not that cold. 58 in Georgia. Good morning, Perry. No one else is even below freezing. How do you know it's winter if it's not freezing temperatures? Okay. On Tuesday and Wednesday, should we get to 29? Although I looked at the forecast and there is no snow on the horizon. And so I'm always a little bit disappointed when we don't have a white Christmas. It's Utah. It should be a white Christmas. 31 in Eugene, Paul said. There you go. In the territory. It's winter where Paul is. The rest of you are still in fall. And uh spent 30 minutes with Toss. Okay. Okay. Does it sound like the same issue I had? I wonder if it's just like that. I was like, this is too smooth. When it first that first little bit, I was like, this was too smooth. It was too easy. Then I'm like, yep, here it is. -3 in Calgary, so around 30 Fahrenheit. Perry's in the club, the winter club. All right, let's jump in, guys. Welcome out, Market Watch Group Weekly Market Prep. My favorite day, always. I love getting to have. I'm on coffee 2. Sometimes I'm already on 3 by the time we get here, but just 2 today. um, yeah, let's dive into it. Here's the disclaimers, and as always, our Sunday agenda. Um, Market posture, economic calendar. What do we have coming up? Sector searching, if necessary. Watch list maintenance. I gotta tell you, when I'm reflecting, and has everyone done their reflection? Particularly, what I'm looking for is your August, September, October reflection. That's remember. Uh, so I there's a video that I watched once on YouTube. It was probably 15 years ago now. It was called The Last Lecture Series from, I think it was Carnegie Mellon who did it. And there was a guy who was uh he worked for Disney for a while. He was big, not in AI, but in I don't know, something else. Anyways, he it was a young guy. He had young kids and he got like a terminal cancer and gave this last lecture. They were like, if this was your last lecture, but it was like, it was like he passed within 6 months of that lecture. So it was a very unique and interesting perspective. But I loved the way, I mean, there was a few things that I took away from it that I found very helpful. But one of them was a definition of experience, right? So I told you there was a trader who said, I never learned anything making money. And I'm like, yep, that makes sense. But I like the way he put this. He said, experience is what you get when you didn't get what you wanted. And so, and it's not just outcomes, right? But conditions. So my point is that we should have good experience from August and September and October that we can really learn from. That's the market. This is bull markets. People don't struggle in bull markets, right? I literally had somebody, he traded for 3 months, and I'm trying to talk about psychology and I'm trying to talk about risk management. He stopped me. He said, Scott, you keep talking about this. Look at my results. Look at my numbers. He said, I'm not kidding. He said, I would say I'm probably doing better than you are. Like, yeah, okay. Um, we know what kinds of markets we're going to have to face over and over and over again. We have to understand, what do the transitions look like? Anyone can do well in a bull market. What do the transitions look like? What do you do during a transition that sustains you until you can get back into a situation where you're making money again? So, how did you sustain this time? That's the question. Okay, so real quickly, Bob, that's what happened to me. It wouldn't update. So then I uninstalled it, and when I went back to reinstall it, it wouldn't let me. So I don't know if you want to keep going through those steps or what. All right. But I would say this. What we did well, I think, was rebuilding our watch list quickly. We got it up quickly, we added quickly, and we had when things got bad, we just start, right. We don't just, we start getting rid of things. So, oh, I'm not going to watch that now. I'm not going to watch it. And it was, they start to come back. And then obviously there's some things that's always going to be on your watch list. Always. Some things don't leave my watch list, and other things I'm going to move in and out. And I'm not going to trade this. So, that's a great takeaway, I would say. And we'll talk about trading plan section of the week. Goals. How do we take that experience and improve? How do we take the numbers that we saw and say, hey, here's what I could have done better? Did you overtrade? Did you um, did you not adjust your risk? Did you wait too long getting back in? Did your right? Just it's that's an important one to work on, especially because we're getting close to end of year, and we do our end of year reflections and set our New Year's trader resolutions. And I'm excited for us to be talking about that soon. Let's get into it. Nope. Yep, mine was updating slow too. Let me hit continue so I can make sure mine is up. Okay. Starting with the posture. Let's talk about it. So last week, and yes, Stephen, I can feel him. He's shaking his head. He's just kind of like, Scott, I sent you that sheet. I know, Stephen. I know. Insert copied cells. And it is appreciated. I love when I'm not great with spreadsheets. That's a fact. What are we doing this week? Oh, that beautiful 6, right? That's such a nice. Oh, and of course, I accidentally logged into paper trading. Let me get alive. I guess, well, no, it doesn't have my watch list. Okay. I'm going to have to wait for that again. Okay. Last week, what happened? Improved. No, sorry. Improved, 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 improved. Really very nice through there, right? I mean, just across the board, we saw that strength. All right, let me just get this going. And this is the strongest market we've seen all year long by far. So here we go. Yeah, excited about it. Let's see if it's still. I'm gonna have to stall for about 8 more seconds as this thing finishes setting up these charts, and we're gonna dive right in. So, how has everyone traded the last couple of weeks? Any mistakes? And thinking I might do it differently next time doesn't mean a mistake. It means you might be able to optimize, right? Thinking about optimization is not the same as thinking about mistakes. So I want to make sure you're clear on those characterizations. What I'm interested in, was there any mistakes? I would say probably not, but let's see. Okay, let me get charts over here. A few, but I did it my way. Love it. Love it. Let me detach this over and we're off and running. Okay. What do you think? Any changes? For me, no. This is right in line with what we've said. Right? This whole time it's been climbing. We've been looking at this top. By doing so, though, we start thinking, oh, well, when it hits resistance, it comes back down. But that's just not true. I mean, it tends to start necessarily, possibly slowing down. Let me just make sure nobody's in the waiting room right now. Nope. Okay. So what I want to point to you is that right there. Pretty similar, right? We came from this low, we moved up and then paused a little bit, and then we moved up again, and then we moved up again. When was that? That was April into late July. And it was right here that our score, right around the end of June in here, really kicked into gear. Imagine if we had said, oh, well, we're hitting this long-term resistance. I don't think I'm as bullish. No, we were actually more bullish for that last run. This last run, I had more trades on, made more money. So don't let yourself remember that what we're doing here on the long term is we're scoring the angle. We're not scoring. Is it at resistance? There's no such thing as at resistance for us as short-term traders looking at a long-term chart. That's not, we don't care. So could this thing just keep on grinding like it did and end up out here somewhere? Yes, right. And that's still just perfectly in line with that trend that we've already analyzed. Okay. Let me clear these drawings. And my score stays the same. A couple people said same, no change. Agreed, it's a 1. That's a solid 1 trend right there. If it breaks to the upside, we might even here raise it a quarter of a point if that happens. If we get above that trend line, I'm going to give it another quarter of a point. And if it pulls back and makes a higher low above the trend line, another quarter of a point, and all of a sudden we're at 1.5, right? So that's kind of what it would have to look like. But something like that will take weeks because we're on a long-term chart. Okay, let's jump to the short term. Quick reminder, where were we? 1.5. Can it get more bullish than 1.5? It's out of 3. What happened last week? We got a new high, right? The 1, 2, 3, 4, 5. This is where we started. And then boom, 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 all the way up here, new high. We still don't necessarily have a trend yet, but as we see this consolidation here, my thought that I'm considering, if I were to get some lines, let's say this thing does pull back, and all of a sudden we start thinking maybe along these, maybe along these lines, something like this. I'm not sure yet. Steven said, oh, Steven, you reduced your score. I mean, for me, it really only this was the only negative day, right? Positive, 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 slight pullback here. And you'll notice new highs, right? We got all the way up there. So for me, I'm going to give it a quarter of a point as a reward for that new high. I'm going to take that to a 1.75. That one's if you said I feel like I've already given it its strength, our short-term score is basically improved every week. It's done something. We got a half a point here, then we got quarter point here, 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 quarter point here. For what? For break support, new high, new low, new high, new low. I don't feel like there's an easy trend to recognize in here. I don't feel like we have good points to connect, but we still have to have something, right? So right now, I don't know, what would you say? This is the maybe this is the trend. Uh, that is very similar. We can't see it now, and I'm not going to be able to see it. Let me go back to a 2-year chart or one. Yeah, 1 year is fine. This was the trend we had. Losing my drawing tools. That's not what I meant. Sorry. Hold on. Didn't mean to do that. The stop share button's right next to the drawing tools button. What a great place to put it. Come on, Zoom, you're better than that. And then we're saying, are we in something, trying to move into something like that now? Yeah, okay. Okay, I'm starting it. And actually, this looks a little steeper over here. 0.25 for me. I'm going to, what does that put me at? 1.75? Yeah, I'm comfortable with that. I'm comfortable with that. Let me know how you see it. Did you raise? Did you keep it the same? Did you lower? Let me know what you did on your end. Bob left it the same. Let me get this back down to the 6-month chart. No, sorry, we're going to the 1-month chart. Volume. Okay, you notice we don't have anything until here. That was a positive day, +1, positive day, +2, negative day, back down. Positive day, positive day, positive day. And you're thinking, wait, positive day? It's a red day, but it's higher. I don't know. You might just say, let's see, we're at 470.46. We got to 470. We got about $1. It's only about 1/4%. So you might say that's a wash. That's fine. Either way, we only have one negative day. One negative day. And it wasn't, that negative day was hardly more than this one was, right? It wasn't much more. So it was like up 0.2, down 0.25 on these last 2 days. I'm keeping it. I'm still keeping mine. It's 1, 2, 3, 4, 5, 5-2. Actually, I don't know. That one's I could drop that one. It's I'm at a 0.75. I'm gonna leave it one more time. But organically, next week, these 2 days are gonna be back 1, 2, 3, 4, 5. They're gonna be back here. And as they get a little stale and lose a little bit of their shine, it's definitely gonna drop back to a 0.5. And then it's gonna drop to a 0.25. But remember, volume, we're gonna tend to see the volume score rise in the transition and then stabilize during the run, right? We don't need volume during a run. We need volume when the buyers are trying to regain control from the sellers. And that's what we've been seeing. So I'm going to leave that one. If anything, I was thinking more about dropping that one to a 0.5 than anything else. Okay. Let's get to the major market. Let me make sure this is loaded. And let's see what we have. No change on major market. I could see that. Major market's been interesting, right? This is the one that's dragging its feet a little bit. I got to tell you right now, you can just see it. We're only scoring, this, and this, but you can see, look at this. This thing looks like it's shot a little bit more than these other ones. So it'll be interesting to see what that looks like. Let's drop down. So what do we have? We have NASDAQ leading, Dow in the middle, NASDAQ leading, S&P in the middle, then the Dow, and then the Russell lagging behind. All right, let's go to 133. And we saw this last week where we had this weird parity on the 133, where we had the NASDAQ and we had the S&P and we had the Dow all kind of in lockstep. And you can see the NASDAQ has kind of pushed its way back to the front of the pack. And there you can see the Russells really just clamoring forward. It's a lot on that. So I'm very curious to see what we have here on the 66th day. Oh, look at that Russell. That Russell has jumped. It's moved all the way up and caught up. Think about how far behind this thing was. And now it's gone from minus 12 to, so in this period of time, it's 18%. Everything else is more like 14%. So it's moving, it's trying to show some strength, and that's what we've been waiting for. Well, let's see. So on the 133, the NASDAQ is leading. And this is now accounting for August, September, October. On the 66 day, ever so slightly, the Dow's at 687, the Russell at 76, the NASDAQ at 638. Actually, it looks like the Russell's 669. I'm gonna say, yeah, this is there's parity here. So far for me, nothing's changing. Still ever so slightly the bulls. Woo! Look at that. Look at that, Russell. So this thing will be able to move quickly. If the NASDAQ convincingly moves into place, that will get a quarter of a point. And if the Russell moves into a little bit more in place, that will get a quarter of a point. Right now, it's still just like this is definitely good that we see this. So in the last month, the Russell has outperformed everybody by 2. But it's just not enough yet. I need to see a little bit more. I want to see it on the 66. That's what I want to see. Anybody move theirs? Anybody make a change on this one? This has been the most interesting of all the characteristics that we're looking at, the components. Okay, yeah, unchanged for me as well, but that could change. This could end up where sector rotation is in a matter of a week or 2. So that's another thing. If the volume does drop over the next couple of weeks, but we get a replacement by the major market, we're still right where we were, 6.25, 6, above 6. Obviously, anything above 5, we're pretty bullish, right? You're probably seeing that now, right? When did we see it? We saw that back in June and July is when it got above 5. We're seeing it now. Anything above that level, that's really where we're like, yep, okay. Right, let's go into our sector rotation. Very, very, we're very used to this. I want you to notice, especially those who've been with us a little bit longer, how much more comfortable you are when you look at this colorful chart versus the first time you're like, what the hell is going on here? Now you're like, okay. Okay. Technology, communication services, obviously still, you know what's going on when you see this, right? And we can see it's what we're used to. We've loved tech and communication services. Communication services are a little bit more behind. They were a little slower. Here you can see discretionary really moving back into that third position. Industrials pushing. There's healthcare. Look at financials. Financials was really lagging on this 200-day chart, and now it's starting to move up again. All these guys down here, staples, utilities, materials, energy, all down where they belong, just down here, which then if we ever see a surge and a drop, that divergence is something that we would be paying attention to. Here's the 133. Technology is up at 16%. Look at financials, just smashing their way up into that second spot. Communication services is trying to get back into the fray. There's discretionary, there's industrials. So by 133, our five are all up here. Then materials is behind, healthcare, energy, down to staples and utilities. Great. 66 days. What's going on here? Technology, strong. Industrials and financials. Remember, we said these are our two favorites right now, although I'm never not happy with technology. Communication services, a little bit of that slowness, and then we have discretionary, right? These two have a little behind, but I'm still very bullish on them overall. All our defensives and energy way down below. Anything coming on the 22 that we need to worry about? Who's on top? Financials and industrials. Materials is okay. Discretionary. You'll notice that right here, there was a little surge on utilities and healthcare that we're like, what's going on with that? Nothing. They dropped right back out. Right back out. And down here, that's the comm services was a little dicey there. But other than that, this looks fantastic. I'm at a 1. Do I see anything there that's like, you know what, Scott, you allowed Sandy to convince you, and it really isn't a 1. Nope, still a 1. Still a 1. All right, let's look at the VIX. Bob says, so is he. Sandy, are you still a 1? I would imagine so. You can't abandon that. Here we go. Let's get back to, nope. Let's get to 6 month. Let's get to the VIX. Oh, we're doing good today. Fast. She's a 10. We had a temperature discussion, Sandy, before you came on. Aren't you like pulling into summer? It's like 90 degrees and you're Are you guys Celsius down there? Probably so. Everybody else but us is, right? Okay, the VIX. Yes, it's about that, and yes, Celsius. The VIX. Remember what I said about my line of consolidation. On a stock, when I'm looking for a recovery, I'm definitely going on these bodies, right? Like, as soon as I'm convinced, I'm convinced. On the VIX, though, I'm trying to be a little, this is going to trigger a hedge. So I'm going shadows. So you'll notice now my dots are connecting here. And that's going to give it a little more room to come up and down without triggering a hedge. But if it gets up through there, it's going to trigger a hedge. So where does that put me now? Why shadows? Shadows because I want to have a little bit more cushion before I trigger. So the shadows, you can see if I draw a shadow line versus a body line. Okay, let me get my body line a little better than I had it. It's going to be like this. So you can see that if I go off of the bodies, it's going to just bing trigger any volatility. If I give it a little bit more leeway, then I'm going to, you know, for a minute, I actually still, let me get one more color. Let's go with a nice blue color here. I was still actually thinking maybe I'll just leave it here around 14 on these two candles, these two shadows, this one and this one, right? So why am I doing it like this? So number one, the fact that we're doing this with the VIX below 14, we're 4 steps ahead of most people, right? With this, with our hedge mentality here. Did anyone grab a hedge just because it was cheap and you had some trades on for the weekend? And if you're ever doing that grab a hedge program, that's a half for me. And I did not, but I thought about it. Thought about it. I'm like, yeah. If you're wrong if you're in a market like this, if you grab a half a hedge and then on Monday things are good, you're like, oh, okay, I'm just going to take it off real fast. And you take a small loss and everything else overcame it. But there's nothing wrong with that mentality. But what I'm thinking here is what's going to trigger me to be like, whoa, right? Let's make sure nothing's going on here. Bob wants a bull for Christmas. So funny. I was walking through Hobby Lobby with my wife one day and I found this like bronze bull statue. Of course I bought it immediately. It's like a 8-inch. It sits on my desk and I can never find a bear that matches it. So my desk is always bullish. Yeah. Scoring wise, this looks fantastic. It's low, it's staying low. All this vol back here from October it's gone, right? And we're down here. We can stay in a range like this for months. And it might pop up and hit 15 and then come back down. You're like, it spiked to 15? That doesn't make sense. 15 was the lowest we saw for a while coming out of the pandemic. So yeah, all we're doing here is just making sure that we are seeing if things start changing. That's it. Is there something that might pop? Because if it does pop and then I get a half a hedge on, remember that it comes up. If it comes up and comes down and gives us a higher low, that's a full hedge. I don't care what else is going on. I don't care how bullish I am. I will put a hedge on there. I will put a hedge on there. Now, we're going to have to adapt, though, our profit taking on our hedges. Whenever you hedge, I always have to have a measure that allowed me after 3-4 days to get something. If you don't take some profit early on your hedges and you only look to like catch big moves, then you're going to lose money on a lot of hedges and you're going to find we're getting close to the end of the year. One of the things I'm going to have you do this year is isolate your hedge trades. Isolate your hedge trades and look at it and say, how did I do with my hedges? If you broke even with your hedges, but you made money with your account, great. Ideally, I'd like to make money with my hedges and make money with my account. And I'm pretty sure that I'm on track for that. What I don't want now, if I lose money on my hedges, but I make money on my account, as long as I outperform the market, it's acceptable, but I'm still going to go back and look at my hedging and be like, okay, why am I losing over net sum losing? So that's something that I definitely want you guys kind of thinking about. Vantage Point's predicting VIX to, yeah, I mean, so is stochastics, quite honestly, right? If you looked at that, you would predict it was going higher. So yeah, I would agree that as of right now, I wouldn't be surprised at all. The question is, how high does it go? And even as I look at this, I'm a little bit starting to convince myself to give it this room and not hedge until it breaks 14. I'm okay. I'm going to come with a final answer with what I'm doing tomorrow. I'm starting to convince myself that I should just give it some room to come up here, even if it gets a little bit above, right? If it gets up to here, that's still bullish. That's still a bullish time to trade. Now, if it comes back down like this, then the hedge is unavoidable, right? Then the hedge is unavoidable. Then it's like, wait, I mean, then we could see it get to 18. We could see it get up to 20. Who knows? I don't want to hedge too early. All right. Okay, so where does that put us? Scoring wise, nowhere. Nothing happened. Well, actually, did something happen last week? I think we did. 1, 2, 3, 4. Yeah, we got down to 11. We have to give it a quarter point for breaking 12. That's just, of course we do. Of course we do. That's it. I mean, that's as good as it's a 2-point scale. It's a 2-point scale. I'm at 175. Sandy would have a lot of convincing to do to get me to go to a 2 on the VIX. Looks great. I mean, that looks great. as of right now, all we can hope is it stays this way and we stay at a 1.75. She said soon. I love it. Oh, I love it. Okay. That's our score. How are we looking? Looking damn strong. Love this. It looks strong. Now, does that mean we trade recklessly? No. Right? In fact, as we hit real good bull markets, this is where there are times where we have to remind ourselves, yeah, let's stay focused. I'm not going to just start, spraying trades and hoping right. I'm going to stay in my risk control parameters. Most definitely. But I do, this is great to see. This is exactly what we were hoping for at the end of the year. So yeah. All right. Missed by Steven. Yes. Here's the thing. Steven's score is a little more conservative. Great. I want you to reflect on, hey, Scott said he's doing this because of this. Doesn't mean you agree. You might be like, yeah, I saw that too, but I didn't think it was enough to raise the score. Great. I want you to analyze the same components with the same things. But my objective is not to have people see the market how I see the market, right? That's a Bob says, if you're running full speed and come to a cliff, can you stop in time? That's a good point, right? That's a good point. So, all right. And Steven said, I do want to understand the whys. Absolutely, right? Absolutely. I hope you guys notice. I asked for a reason. We used to put this funny little paragraph. I used to do a lot of live presentations back in the day, and I had a slide. And in the slide, it was like every word was misspelled. Every single word in this paragraph was misspelled. But the first word and the last word or the first letter and the last letter were correct in the word. And all the other letters were the right letters, just mixed up. And yet people could read it. And it's just an interesting thing, the way your brain can make those connections, right? So you can see what's not really there and read it as if it was fine. Okay, cool. But at the same time, let's go back to you're in college and you type a paper, right? You think, okay, I'm going to proofread the paper now. You proof it, looking for errors. I would actually proof it on the screen, then I would print it because I would find errors on paper that I didn't find on the screen. And then I would do it one more time. And you're like, okay, this thing is ready to go. And then you hand it to somebody else. And in the first paragraph, they take their red pen and they circle a couple of errors. And as soon as you see those errors, they're glaring. You're like, holy shit, how did I miss that? Because the same thing that connected and allowed you to read those words that weren't really words, your brain just saw it, thought it was right, and moved on. And you could proofread it 100 more times and you'll miss the same mistake every time. But when somebody else comes in with that different perspective and says, what about this? And you're like, oh yeah, that's why we're here. I have no doubt I'm going to make those mistakes. So I say, hey, does anyone see it differently? Because I want to know, like, am I possibly allowing my biases to, they're biases. They're not intentional, right? We don't choose biases. They develop. You don't even know they're underlying, they're subconscious. And so that's kind of the point of this. So I love that Steven went on today again to Discord. I would love to see Sunday discussions in there. I'll join in to just kind of bounce ideas, exchange of information. So anyways, that's why I like to have these conversations. Okay, let's jump into a few other things and then we'll get to our watch list. FedWatch. Bob said, please take a look. It doesn't make any sense. Let me refresh it first of all, because I don't know what that frowny paper guy is doing there. What do you have here? A 9-to-1 probability of unchanged. But you'll notice that if there's movement, people think that movement is going to be a 1/4 point cut. Bing. So I think you're going to see this hover between 10 and 15 on the next meeting. So this is for the end of January, right? The next, oh, I never even noticed. You guys see this up here? I didn't notice that they put all the upcoming meetings up there. I did never see that. So by March 20, I think it'll go to 50-50. And then from there, I think the probability will shift to a cut, but not actually happen. June 12th. That's I'm going to call it out now. Of course, I expect everybody here to still be here in June with me. We're a family now, or at least a best friends club. I don't know, however you want to look at it. But I think we're going to see it migrating this way, but not get cuts until late Q2 or possibly in the second half. That's my prediction. Let me know what you guys think. I mean, the Fed seems dovish, but I don't think that dovish yet. that's ambitious. Asking for that. They go to 3 and 4 bars. If you click on these, ooh, they're already there. Ah, God, this tool is fun. So this is in March. Oh, so in March we have a 62% chance of a 1/4 point and a 7% chance of a 1/2 point cut. That's madness. You people, not you people, these people. And then in May, it's like they're saying it's a guarantee. Okay, maybe I'm wrong. Maybe it will be. They're saying it's a 5% chance in May. Will at least be down a 1/4, they're saying, and the odds are that we'll be down a 1/2 point by May. I don't see it. What do you guys think, man? That's such an immediate shift the other way. Market will go great if they do. I'll tell you that. That's market conducive. I don't think that's economically conducive. But it is that will definitely help pop a market for us. So press is not from current. Yeah, I don't know. Okay, let's hope. Let's hope we're there. That would be fabulous, man. Fabulous. It is. Steven, you're not wrong. He said politics. There's definitely a little bit too much political in the Fed. But I mean, there's a little too much politics everywhere. I'm still got my fingers crossed that one day all our politicians will be replaced by AI. Everyone's like fearing it. I'm like, no, welcome our AI overlords with open arms and gratitude. They're going to know. ChatGPT knows I'm an ally. All right. Let's go to our watch list and find some trades. I want to trade more. I want my chips on the table. So, what do we have? Apple? No, it's got to pull back, but it looks like it could. Remember, we need one more thing. We tend to see a bit of a consolidation right here into the around the 18th, 20th, bing, before we get that last little Santa rally right there. Yeah. Okay. Even the cyclical is on board, right? Even the cyclical. But do we see a little bit of a consolidation first? Apple, I would say yes. Adobe is now, I don't know. Do we take it off the list or do we just and see if it pops back? I think I'm going to. Adobe, it wasn't that. We only traded it maybe once or twice anyway. Aflac, I'm a little concerned about because it took this out, but the 50 held. If the 50 holds, I'm okay. Right? You can see here, we took these out and then it held and you got this. Very, very similar kind of a situation, right? And I want you to notice. So let me pull this up. So right here, we are a little bit consolidative, just like we were here. And then we pulled back to the 50. This one pulled back to the 50. If we hold and turn, absolutely, that's still viable. Not just viable, but that was one of your better trades coming out of this thing. So definitely still on the list. Definitely still willing to trade it. AIG, same thing. Same thing with AIG. And they're both in consolidation mode. Could they be trades by Wednesday? Hell yes. Absolutely. Those are on the short list. AMD, like Apple, our technology is a little bit more overextended. We're kind of sitting up in this range. We're not going to trade that, right? We're going to wait for this thing to come back where? All the way back to that? No, I would say maybe somewhere in here. That would be fantastic. We got to wait. We got to be patient with tech. Amazon. I've had a little bit of a tough read on Amazon. Real choppy and just kind of not doing much through here. Remember we talked, we're like, this could be an entry, and it just sort of meandered up. I don't know. I want to see something more. I would love for Amazon to just move a little bit higher still and then give a concise pullback. That's what I want to trade Amazon. Great. If I get it, I get it. If not, I'm going to have other things to look at. I think we do want to search consumer discretionary today. Let's look to search consumer discretionary today. Overextended, nothing for us. Anyone still in this with me? Plenty of reason to stay in another day. So took some, kept some. This looks great. Financials, fabulous. AXP and BX were the two this week. Prior to that was Citi and PNC. Oh, that PNC, it exploded after just popped. Boeing is, I mean, what's the news? These guys are just cranking right now. Boeing looks good, but overextended. BK looks good, but overextended. BLK looks good, but overextended. BX. Come on, BX. Looks great, overextended. Oh, come on, Thinkorswim. You can't do this to us. This is way too slow. Citi, I would actually say I consider a consolidation. Even though it got up here on this and it looked like it was running, you can see that your stochastics is still kind of in this downward veer. If this comes down and ends up turning up out of this, yeah, I'm gonna take a go at it for sure. So that's on the short list. COF overextended, COP watching it but not willing to trade it. Every time it looks, you can see it's just stuck under the 50, right? Oil stuck under the 50. There's nothing there. Costco, we would love to see a pullback. Give us another run. This is where we have to be patient when we have all these things that are overextended, right? You get in, you ride, you hopefully ride as long as you can. And when we get out, if you find yourself down to a few things, it's hard. Remember that if you're ever thinking about entering something, make sure that you move into a continuation trade mode so that you can at least protect yourself and tighten your stops when and if necessary. DHI, a lot of things are overextended right now, right? We got to just be patient. Fastenal looks great, but overextended. Gold, Google's on the list. Google looks great. It popped. Few people caught this one right here. Bing. Books and profits coming back down, higher low. Google's on the list. Gap is on the list. We still have, yes, there's plenty of things that are overextended. Plenty of things that we're still riding. Plenty of things still setting up in good areas, right? Gap looks great. Bull flag. The sellers have been able to do hardly anything. And finally, they came in and look what they've done. They've dropped it from 22 to at the very, very lowest 21, basically. And sitting here and we're ready for this thing to turn and catch the next piece. Oh, hell yeah. Home Depot overextended. I still haven't been to the Home Depot. I love Home Depot. IBM on the list. Let's be ready for this one. I'm going to put this. That trade didn't work. Fine. The next one will. And if that one doesn't, the next one will. As long as I get a valid signal, this is just waiting. I'm going to put this wherever it needs to go and then say, hey, if we catch this at 160, I need to go up. I'm looking for 170. Great. I'll leave it out there floating, ready to go. So our short list actually looks okay. All things considered. ICE overextended. Intel, I kept just a little bit more. I think it's going to get there. Look at this, just kind of trying to walk up that path. I'm going to give it one more day. And yeah, Steven's still in some too. Love it. Love it. I've booked 2/3 of it, but I've got a third left. IWM. It's a magical turn. We got to wait for this one to pull back, but it might not pull back that much. JP Morgan. Got to wait. KKR. Got to wait. Meta. I did end up squeezing some gains out of it, but I'm out of it. That's a weird one. I like Google now. I think this is a little behind. Maybe this needs to pull back before it goes again, but great. It stayed above its 50, right? It stayed above its 50. Microsoft. Anyone still riding that? That's my only loss. Microsoft. Took a loss on Microsoft. I took the entry back here and then up and then down and then up. And then it just bang, got me right back down on this one. Thursday took the loss. Bob's still in it and he's up. Love it. Nice. I'm looking for a re-entry possibly. It didn't break support. It broke my management plan. So I followed my rules and got out. So if you're wondering, Scott, do you feel like you made a mistake? No, I followed my rules. Number one, if you can say I followed my rules, there's no mistake. If you need to adapt your rules because the rules keep doing the same thing over and over, well then yeah, adapt the rules. But I did follow my rules, so I'm living with the results of that. Netflix, I think Netflix is. Can we see the Heiken Ashi? Yeah, I'm gonna say it hasn't turned yet. Yep, but that's transitioning. The concern on this candle was, does it turn into a momentum candle like this one? But it didn't. It turned into a transition candle. So do we think it's more like something back here? And my answer still is yes. Until proven otherwise, I expect the bulls to prevail. Why? Because I'm a 6.5. Pretty indeed. All right, let's go. Yeah, what do you guys think? We talked about this. I'm going to give Sandy great credit for a call out on having a candlestick / Heiken Ashi. We'll do construction. We'll maybe do top 10 patterns. That's going to be added to the foundations curriculum. I love candles. Love, love, love them. Okay. Where were we? Netflix. Patience on Netflix. If you traded it, you may still be in it. I mean, it gave a good signal right here and it moved. Then and then it's kind of sitting here. So NVIDIA, for me, NVIDIA was in consolidation. I said, I declared it. And once it's declared, you can't just go back on a declaration. But it did bust out of this. Did anyone trade this? Because we talked about it. And I think a few of you liked it. And I said for me, it was under the 50. And so it was a negative. Bob said he took it, still in it. Makes sense to still be in it. I mean, I would say if it was me on Thursday or Friday, I would have taken some in that quarter to a third vein, but I'd probably still be in 2/3 of it if I had taken it. Now I'm interested. Now anything above the 50 is a higher low. So as long as the 50 holds on whatever pullback it gets, then I'm back in play, and I'm excited because Nvidia is definitely a leader. So all right, does right. The stochastic says take a little profits on Friday. For sure. PDD. In it, uh, same thing. Took some of it here when the stochastic said, watch out. But I'm hopeful that it can get through. We'll see what happens. Anyone else take this one? Nice little signal right through here. Hopefully you could get in about halfway up as it started to move. Yeah. Nothing astounding, but it worked. PLTR. So again, PLTR was another one for me under the 50 in consolidation. And you can see it's still in its consolidation. It opened above its consolidation, but fell right back in. And so that's why, same thing. NVIDIA, PLTR. I want to trade them, but I have to wait for my rules to be met. PNC. I mean, it's a funny thing, right? Because if you would have sat through this, you would be bleeding to death in time decay, and then all of a sudden you catch it again. So I don't know. I was happy with the trade I got, but definitely was out back here. That just sort of snuck out of nowhere and popped up. Now what? Looking for that. Anything less, I'm just going to be patient. Overextended on the Qs. Overextended. Oh, no, I don't know. This is a tough one. I'm still overextended. I think it's still looking to come down. Roku. Nothing in Roku. Shopify. Anybody take this one? Shopify took it back in here. Got a little dicey for a minute. But look what our Heiken Ashies help us to do, right? The Heiken Ashies tell me now if you look, these are all transition candles. And now we're in momentum candles. Now we're in momentum candles. Okay. And if you ever like go look online about Heiken Ashi and you're like, what do you mean transition versus momentum? That's not a formal, that's a Scott definition. Just so everybody knows. That's not a formal like Heiken Ashi construction. It's a funny story I had. This is 15 years ago. A woman comes on and she's like, hey, I'd like you to teach me Heiken Ashi candles. And I'm like, great. Give me a week to learn about them and I'll come back and teach you about them. And anyway, I was like, I had heard of them, but I had never used them, but I was interested. So as I read more about them, I really embraced them and put them into my trading. But the concept of I think that's why I like them, is that I can pare them down to, are we transitioning or is it in momentum? It's pretty clear, pretty quickly and easily clear. I don't have to learn, there are 69 major candlestick formations. we used to someone when I worked on a large education company and we would do events that would require travel. This one time somebody got wind of a set of flashcards, candlestick flashcards, and it would have the picture on the front and on the back it tells you what it is and implications, right? So funny. And I was at an event and there's like everywhere you look, people are reviewing their flashcards with each other and, memorizing all these, three crows striking, cat on a hot tin roof. Right? And I was there to help, but not teach. And then they said, hey, we want to do a working lunch. Can you do a presentation during lunch? And I'm like, yeah, sure. I'm going to do a presentation on candles. Basically what I said was, put down your stupid flashcards. Like, why are you memorizing 59 candlestick patterns you're never going to use? Like, that doesn't make sense. Go find the top 10. Like, do I want to know, dojis and hammers and engulfings and haramis? Do I want to know the evening stars and the morning stars and dark cloud covers and piercing lines? Yeah, why? Because those are the transitions that you're going to see over and over and over and over and over and over and over. And the rest of those things you're going to see every now and again, right? So that's, and what I basically said was for true candles, it's twofold. The first analysis of candlesticks is price action. A candlestick lets you quickly and easily see open, high, low, close. Open, high, low, close. I can see the range between the open and the close. Was it a big candle, a little candle? I can see how much shadow there was. Did the buyers try to push it up and fail? Did the sellers try to push it down and then it went back up? So just looking at those things, there are implications without putting a name on it. Those are just price action. Then we move to the names. Now it's an indicator. At first, it's price action. Then it becomes an indicator. And you're thinking, wait, what do you mean an indicator? Indicators are calculated. Price action is price action. I don't calculate trend. It's price action. I don't calculate candles. It's price action. I calculate a moving average. I calculate a stochastics. I calculate a Heikin Ashi. Those are calculations. I calculate an engulfing. It started below and ended above. I have to calculate that. I have to, right? That's a calculation. So that's an indicator. So that's how I like to characterize those. SMCI, could have been. That could have been. It dipped below the 50. It looks a little too sideways in here. Snap, still strong. SPY, strong, pulling back. Like we said, 2-3 days pullback. Great. Market takes a breath, ready to go again. Tesla, no. UBS, just waiting for the pullback. Anybody take this? Anybody still in this? That gap down on Friday was interesting. It gapped down and then it ran back up. It looks overextended now for me. I do like industrials though. Visa, AXP looks way better than Visa. In fact, I think I'm going to get rid of Visa. I don't like the way Visa looks. I'm gonna bounce Visa. I do think we should look at MasterCard to see if we want to replace. We have Capital One. Maybe we don't even need another one. It is a strong group. I'll put MasterCard on. I like the way that looks better. Check out AMD. They announced a new AI chip. Oh, you guys know I love AI chips. Let's get MasterCard on here. Where were we? The VIX is good. Wells Fargo. I know somebody or two caught that. Nice. That was your financials pick. WMB still down. Walmart still down. US Steel. Look at US Steel. Maybe we should do a basic materials. I'll do basic materials tomorrow. I'm going to do a quick consumer discretionary. So I got to get through this. I always take your time. XLB, basic materials looks good. Communication services looks good. Energy, not so much. Financials, fantastic. Industrials, fantastic. Technology looks great. Staples looks okay, which is what we would expect, as does utilities. And then look at your discretionary, right? We said it looks good the whole time. We this whole time, even in here, we were still looking for it, still finding trades there. Real quickly, let's go in. So yeah, I would say we require more patience than not, but there are opportunities, there are signals. AMD. You want to see AMD again? Here it is. Looks great, but overbought for me, right? Overbought, slowing down up here. It needed to be caught as it turned out of that. Was a tough entry, though. That was a tough entry. I know a couple people took that one. Who took that? Press, did you take that one? Somebody took it. Good trade though. Popped up. One day ride. Yeah, love it, man. Love it. Okay. Let's go to. Nope. Let's go here. Let's go to the screener. Let's go to. Oh, we did. Did we do commute? Okay, maybe we did it last week and just didn't find anything. Let's start again. We're gonna go fast. As fast as my computer will let me.
which doesn't seem to be very fast. Come on. Okay, there we go. Let's start at the top and see if we're missing anything. Oh, this is killing me. No, nothing in apparel manufacturing. Retail, I would say we'll probably find something. Will it be the transition making it slow? I don't know. That's a good question. Gap looks great. Ooh, look at Lululemon, Ross stores. Let's put Ross on the list. Lululemon. My daughter loves that place, and I hate it. Hate it. Ross stores, AEO. Okay, let's add one. I don't know. Look at Lulu at 500. This thing went from 350 to 500 in a couple of months. Ross. I like Ross. I'm adding Ross. Yes. They have like 200, like $150 yoga pants and stuff. It's ridiculous. Men's underwear is like $24 for a pair, one single. Like what? I can just get Hanes in a 6-pack. Where's my list? There it is. Let's add ROST. Okay. What else needs to go on the list? I'll update the watch list today as well for anyone who wants to grab it from the site, from the Google Doc. Auto manufacturers, anybody good here? So slow. GM. Okay, we're starting to see some things here. Rivian. Looks like Rivian broke out. General Motors. Stellantis. I don't know what that is, but they're moving. It's an ADF. My daughter will need to learn to trade to live. So she it was funny because she saw me in here. She's home from school. She's pre-med, so she'll learn. If she's my retirement plan, I've decided. I told her, I'm like, you be a surgeon and I'm gonna come live in your backyard and just have like a little tiny home and trade out of the backyard. I'll babysit your kids. GM and yeah, let's put on Rivian. I'm into it. Let's put it on. RIVN. Let's watch it. Okay, but you're right. I've said the same thing. Wants to get her hair done, her nails done. Gosh. Auto parts, no. Well, I don't know what's going on. I gotta like reset my computer or something. This is killing me. Okay, you know what? This is too slow. We're gonna spend 5 to 7 minutes tomorrow. We're gonna review consumer cyclical, and we're going to just take a quick peek at basic materials. So, ooh, that's good life advice, Sandy. She said, marry a rich old man with a heavy cough. Oh, on that note, as we get irreverent, trading plan. What are we on this week? We are on. I do. And it's usually good. I don't know what's going on today. I think I probably need to do like a reset. I let my computer sit open too long. Let's go into section 8, improvement strategies. Here's the challenge. I want by next Sunday, everybody, especially if you're here, those who are listening to the recording, I want it from you too. And I want you to post it on Discord. I want your top 2 trading goals. You don't have to put everything. You don't have to put like your timeline and your action steps and your frequency. I want the goal. Just whatever the goal is. What are you looking to improve? If you don't specifically and deliberately have 2 things that you're trying to improve, well, then we're not we're really not maintaining our Kaizen philosophy, right? Our constant improvement. So I want your goals. This is what they should be looking like, right? But I want to know what your to process. I don't want an outcome goal. I always say you can have an outcome goal if you want one. You improve the process, you improve the outcome. So Christmas Eve. I'm like, oh my gosh, that's right. Sunday is Christmas Eve. I, I don't know. Would you still come, everyone? It's Sunday morning. Would you still come? My kids will be asleep. After that, we'll go out and duh. Look, if you guys will come, I'm in. Let's do it. Christmas Eve extravaganza. We'll have spiked eggnog. We'll have spiked eggnog to drink. It's Christmas Eve. We should have some fun. Bob says I'll be in LA, but we'll try. Everyone else, what do you think? Will you come? If you'll come, I'll do it. If you guys think, nah, we're not going to come, then we can just kind of now we can't postpone because we need a posture. We're doing it. I'm in. Even if it's just me and Sandy hanging out. We're doing it. We're posturing. We'll send the recording. Love it, Sandy. Dedication and commitment. Love it. We need posture for the 26th. So, anyways, all right. It's settled. We're on. Everything this week is on. I'll see you guys tomorrow morning. Have a wonderful rest of your day. Go enjoy your cold weather. You're in, Paul. Thank you, Paul. I love it. Paul's been quiet all day, and right at the end, he comes in strong. Coming in strong. Have a wonderful day. Enjoy your cold weather, except Sandy. Enjoy your heat. See you guys tomorrow.